This is Nightly Business Report with Bill Griffith and Sue Herrera.
Mixed market. The Dow climbs, but the rest of the market falters as the bulls struggle to gain momentum.
Rule rollback. The Senate votes to ease banking rules, marking the first rewrite of Wall Street reforms enacted following the global financial crisis.
The sale of the century, a rare look at the Rockefeller Family collection, which will be auctioned off potentially for record amounts. Those stories and more tonight on Nightly Business Report for Thursday, March 15th.
Good evening, everybody. A tug of war took place on Wall Street today. There wasn't one thing that drove stocks, but instead many, sending them up and down and back up again. Keeping a cap on gains today was a report from the New York Times out midday that said that special counsel Robert Mueller has subpoenaed the Trump Organization as part of his Russia investigation. Then there was the announced elimination of a key tax benefit for some pipeline companies by the Federal Energy Regulatory Commission, and that sent shares of energy companies south. But in an interesting turn of events, it was trade talk that helped lift some sectors. So when all was said and done, it was the Dow that was the lone gainer among the major averages today, advancing 115 points to 24,873. The Nasdaq lost 15. The S&P was down 2.
Industrial stocks gained today when a White House advisor played down the risk of a trade war. Peter Navarro, the director of the White House Trade Council, said when it comes to trade, the president may be firm in his convictions, but he can also be flexible.
Let me just say one thing. We come in peace here. Okay? The thing everybody on Wall Street needs to understand is just relax. If you look at the negotiating posture of this country, all these countries that are running huge trade surpluses with us have no incentive to rock that boat. All we're doing is standing up.
Navarro said that by slapping tariffs on steel and aluminum, the White House is acting in the nation's economic and national security interests.
Also in Washington, the Treasury Department imposed sanctions on Russian organizations and individuals in retaliation for interfering in the 2016 presidential election and for malicious cyber attacks. Those sanctions target the same Russian groups that were indicted last month by Special Counsel Mueller. The sanctions block them from traveling to the U.S. They freeze any assets in the country and bar American businesses from doing business with them. The Trump administration also accused Russian government hackers of targeting the American energy grid.
Oil prices edged higher today, helped by signs of growing global demand. The International Energy Agency expects that more demand will offset increased U.S. shale production, keeping the oil market balanced pretty much this year. The report comes one day after OPEC raised its forecast for shale production. The price of domestic crude settled above $61.
Well, the markets found some support from economic data today. The weekless jobless claims, they fell last week by 4,000, clinging to a near 50-year low, reinforcing the strong labor market perceptions. A report from the Philadelphia Fed said that firms in the Mid-Atlantic region reported difficulties finding workers, and that more than half the firms were raising wages to address those shortages. Other data showed an increase in the price of imported goods last month as the dollar weakened and the commodity prices rose.
There was also new housing data released, and it comes at a key time of the year for the real estate market. Home builder confidence fell for the third month in a row as builders complained about the higher costs for labor, land, and lumber. According to Freddie Mac, mortgage rates fell for the first time this year.
Let's turn to our guests now for more on the outlook for the housing market as we approach the big spring selling season. Aaron Terrazas is senior economist at Zillow. Cole Smead is portfolio manager at Smead Capital. Aaron, are we still in the situation now where we have tight inventories, not enough homes for sale, and so much demand still out there? Is that the idea?
That's correct. Supply really has been the story of the past 2 years, and unfortunately, it's just getting worse. You look at existing home sales, they're down about 5% over the year. New home sales are down 1% of the year. At this point in the housing market cycle, with prices rising so much, demand is out there, you'd expect home builders to be building a lot more than they currently are. But as you noted, they're facing a lot of costs. Labor, land, materials, raw materials, lumber are all going up.
So, Cole, how do you factor that in when you look at the housing sector? and you want to invest in it. How do you pick those stocks, given the backdrop that Aaron just laid out for us?
Well, and what Aaron's talking about is particularly bad in places like Seattle, where Aaron and I are. Those are some of the worst markets, be Seattle, San Francisco, et cetera. The problem is, as you laid out with land, the land is most abundantly available in the southern part of the United States. And so as we kind of look at this, that's all dealing with supply. Supply is the tightest it's been going back, call it 34 years. When you look at actual building, though, building on a per capita basis is below depressionary levels of the last 60 years. So the real big question is, in effect, when will millennials finally be marginally dominating the housing market in a way that people are really excited about housing? They've showed up, and that's showing up in the data.
Right.
I would also tell you that builders are always worried about land prices. The bigger thing they're seeing an effect on is labor inflation.
Cole, let me ask you about some specific stocks. Let's start with Home Depot. You know, it's long been considered a proxy for the housing market. It hit a high of 207 in January, and it has just been falling ever since. Today, around $176. Is it trying to tell us something about the housing market?
Well, in the interim, that's how some people could read it. If you look back 10 years, though, Bill, I mean, it's gone from the mid-20s 10 years ago to 210 and now back to, 178 roughly. Okay, so people have made sevenfold on their money in 10 years. We've finally seen a period where they've decided to sell the stock and kind of take it to a lower price,
so you're
cleaning off some of the froth.
You're saying it's profit-taking, not so much trying to foreshadow a problem for the housing market.
Correct, because Home Depot's best environment is not when we're building all these homes, going forward to meet the supply that Aaron talked about. Yeah. It's when those homes are already in place, and every 30 to 50-year-old woman out there wants to watch Chip and Joanna Gaines, their show on Fixer Upper, and then go make their house like that. And that is when housing can be horribly profitable to Home Depot. If you look at fixed real estate investment as a percentage of GDP, which is something they often quote on their quarterly earnings calls,
right,
we're still below an average period of people spending money on houses.
Before we get to some of the other stocks, Aaron, let me ask you, the one thing we haven't talked about is the prospect of higher interest rates. What impact is that going to have on the housing market, especially since now there are some on the street, and I'd be interested to hear your projection, who are looking for 3, now maybe 4 increases in interest rates, given how healthy the economy is?
Look, interest rates are rising. They're up about 50 basis points since the start of the year. And, certainly that does increase your typical home buyer's monthly mortgage payment. But, beyond kind of the tales of kind of some very financially savvy individuals, people buy houses because life is happening, because they're having kids, because they got a new job. So that decision to rent versus buy, millennials are out there. They're buying houses. They're having kids. They're getting along with their lives finally after waiting for so many years. The question is, are their budgets going to be a little bit tighter?
Right.
And for however tight their budgets may get, they're bidding for those scarce homes that are available. So they want homes, and mortgage rates will maybe be a little bit of a headwind, but until they get up to 6.5%, I don't think it's going to have a meaningful impact.
Cole, before we go, we have just a couple of seconds. Do you like any of the home builder stocks right now?
We own NVR and Lennar. NVR is in more your guys' neck of the woods, Mid-Atlantic, and then Lennar's coast to coast. And we own Home Depot, too. It's a tough business because they usually borrow money for that land we talked about, and that can make the cyclical downswings really tough. But there's a great runway to this. Housing's a great place to make money the next 10 years.
By the way, here's a 60-plus-year-old man who's a big fan of Chip and Joanna Gaines as well. So
there we go. Hey, I am too.
There you go.
Thank you.
Thanks both for joining us tonight. Aaron Terrazas from Zillow, Cole Smead from Smead Capital.
Thank you.
Wells Fargo is reportedly facing some more legal trouble from regulators. According to Reuters, officials are now said to be preparing sanctions for the bank for receiving commissions on auto insurance policies that were forced on more than 500,000 drivers. Wells Fargo had earlier blamed a third-party vendor for that issue. A separate report shows that CEO Tim Sloan made more than $17 million last year, about $4 million more than in 2016.
Last night, we told you that the Senate was voting on legislation that would ease restrictions on banks that were put in place following the financial crisis of a decade ago. The chamber did pass that, representing the most significant change to those rules in the time since the crisis. But getting it through the House could be tricky. Kayla Tausche reports for us tonight.
Efforts to relax financial crisis regulation on banks moved forward this week, but are stalled just before the finish line.
The bill, as amended, is passed.
The Senate passed a bipartisan bill that eliminates strict oversight of banks with less than $250 billion in assets, but it requires the House to sign off before sending it to the president's desk. House Financial Services Chair Jeb Hensarling says he's not just going to rubber stamp it. That leaves two options: pursue a contentious conference process between the two chambers, an option House leadership does not favor, or hash out differences in private and produce a joint bill both sides of Capitol Hill can pass. Hensarling has assembled a package of more than 24 provisions he wants the Senate to consider including, and he expects to speak with his Senate counterpart soon, though there's no deadline by which the two must move forward. For Nightly Business Report, I'm Kayla Tausche in Washington.
Time to take a look at some of today's upgrades and downgrades. Dow component ExxonMobil's rating was raised 2 notches to a buy at HSBC. The firm cited a stronger outlook for the company, cash flow growth, and the potential for significant share buybacks. The analyst price target now raised to $82.50. That stock rose 1% to $74.42. Meanwhile, Viacom's rating was also upgraded to a buy at Needham. The firm cites valuation and the company's efforts to diversify away from linear television. The analyst price target there is $40. Viacom shares rose a fraction to $32.83.
The price target on Goldman Sachs was raised to $280 by J.P. Morgan. That firm calls Goldman the best bank on Wall Street and says it will benefit from improving market conditions. The analyst sees better profits in its trading business as well later this year. The stock was up a fraction to $266.61. It was a downgrade from Match Group to neutral from buy at UBS. The firm says Match's core brands will not return to positive year-over-year growth this year. The price target, $48. The stock was off a fraction to $46.71.
Still ahead, well, you see this, the ultimate billionaire yard sale.
It's the billionaire's yard sale of the century. The Rockefeller family selling off more than 2,000 objects. We'll take you inside the family treasures of what could become the most expensive auction ever in history.
Investors were rattled a bit today when Walmart was sued by a former executive who is accusing the world's largest retailer of unlawful conduct in its e-commerce business. The whistleblower alleges that Walmart mislabeled products so that third-party vendors were paid lower commissions amid growing pressure from Amazon. He said he was fired under false pretenses in January of last year. Walmart says it intends to vigorously defend the firm against those claims. But you can see the decline in the shares when the news was released.
Toys R Us is asking a bankruptcy judge now for approval to stop paying its suppliers as it tries to find buyers for its international business. As we reported last night, the retailer does plan to liquidate its U.S. operations. Hasbro says that it expects the pending liquidation to be disruptive in the near term. Toys R Us, after all, accounted for about 9% of Hasbro's global sales last year and about 11% of Mattel's sales. Shares of Mattel and Hasbro were both lower again today.
The nation's largest radio broadcaster is filing for bankruptcy. After years of trying to manage its $20 billion debt load, iHeartMedia says it has reached an agreement in principle with creditors to cut its debt by more than half. iHeartMedia has faced increased competition from the streaming rivals Spotify and Pandora.
The Bayer and Monsanto merger may face regulatory hurdles, and that is where we begin tonight's market focus. Bloomberg is saying that Bayer's proposed $66 billion acquisition of Monsanto has raised competition concerns with the U.S. government. The report says that Bayer has agreed to sell some of its businesses, but the Justice Department apparently would like to see even more. Shares of Monsanto fell more than 4% today to $117.20. And discount retailer Dollar General reported same-store sales that rose at a robust pace last quarter and gave upbeat earnings guidance for the full year. Dollar General also hiked its dividend by 12% to $29 a share. It was among the best gainers on Wall Street today, gaining almost 5% to $93.44. Investors were not so kind to Sears Holdings, though, today. After the bell yesterday, the owner of Sears and Kmart posted its first quarterly operating profit in 3 years. But here's the catch. It came from tax benefits. Comp store sales at both chains fell by double digits over that time frame. Shares fell 6% to $2.26.
Barnes & Noble gave guidance for fiscal 2019 that topped analyst estimates. The book retailer said it expects earnings to be helped by cost cuts and improved sales trends. Shares of Barnes & Noble finished 6% higher to close the day at $5.10. And after the closing bell, Broadcom reported results that beat estimates thanks to stronger demand for its chips. The company, which recently dropped its Qualcomm offer after the Trump administration blocked the takeover, also gave an outlook for the current quarter that was pretty much in line with estimates. Shares were initially higher in after-hours trading, and then they fell. They ended the regular day up more than 2% to $267.76.
The legendary collection of the late David Rockefeller is scheduled to be auctioned off at Christie's next month. Items range from famous paintings to fine china. And they're expected to fetch a record amount, as you can imagine, with all, by the way, of the proceeds going to charity. Many say this could be the auction unlike any seen before and maybe ever. Robert Frank got a rare look at the pieces, and he spoke exclusively to David Rockefeller Jr.
No other name in American history symbolizes great wealth and status like the Rockefellers. Now, to their achievements in business and philanthropy, the Rockefeller family is about to add another, the largest auction ever. In May, Christie's and the Rockefeller family will sell off the entire collection of the late David Rockefeller, who passed away last year at the age of 101. The sale is likely to set a new record for an auction of a single collection, estimated at more than $500 million.
Sold at $29 million.
In a rare interview at the family farmhouse in upstate New York, David's son, David Rockefeller Jr., said he hopes the family treasures will find new homes around the world.
I love the idea of thinking about these pieces in many other people's homes. It's like a grand recycling.
Aside from being the yard sale of the century, it's also a rare window into a family that, for all of its public good, has maintained almost obsessive privacy. David Rockefeller was the grandson of John D. Rockefeller, the controversial oil tycoon who became America's first billionaire in 1916. David was the chairman and CEO of Chase Bank and served on countless charities, museum, and educational boards.
I hope that many of the buyers will have that sense that they're buying stories and buying taste and buying something homey as well as something very beautiful.
Their unmatched flatware collection includes Napoleon's favorite sugar bowl and dessert service. There are rare Asian Buddhas, porcelain collections, and carved birds, plus family heirlooms, including a 13th century Syrian incense burner that sat on David Rockefeller's desk at Chase Manhattan.
He probably liked to burn incense every day to set the mood, right?
It would be great to think that.
This piece is expected to sell for, I think, over $200,000.
That's what I hear.
The star of the sale is a Picasso. It could fetch over $100 million. There's a Matisse nude that could sell for as much as $90 million, and a Monet that's estimated at up to $70 million. While David and Peggy always said they bought for beauty, not profit, their art also became a great investment.
My father, when he was looking back at all the sectors of his investment, his real estate, his stocks and bonds, his art, he actually had a colleague of his measure how well they had done as generic asset classes, and art won.
During his lifetime, David gave away nearly $1 billion. All the proceeds from the auction will go to a dozen nonprofits selected by David. The Rockefellers are now in their 7th generation. Their financials are kept private. Forbes put David's net worth at around $3 billion, but he was just a beneficiary of a trust that will now get passed down. David Jr. says the sale of so many family treasures is bittersweet.
There are members of the family who are really sad about that. I'm saddest about the idea of going into an empty house that used to be a beautiful house, full of all these amazing pieces of art. My dad taught me not to look back.
But you don't have to be a millionaire to live like a Rockefeller. David Rockefeller's martini cufflinks are being offered with an estimate of between $400 and $600. And these ceramic cheetahs are estimated at around $200. Christie's is storing most items in a secret Manhattan basement and is taking some of the top lots on a world tour. The auction house says the Rockefeller brand has global appeal and hopes the sale may even inspire today's new billionaires to follow the Rockefeller model.
I think it sets an example for rich Americans in terms of both being involved in business and also being involved in the community and understanding what a serious commitment you have to make things change in a positive way.
David Jr. said it also reminds us that while great wealth can come and go, noble causes endure.
If you get too attached to material things, it takes your focus off of all of the other important things in life, including relationships and global peace and all of those other important issues. So at the end of the day, it's not the things themselves that matter in life.
For Nightly Business Report, I'm Robert Frank in upstate New York.
We'll keep you posted as to how that auction goes. Great stuff. Coming up, hoop dreams. There's a lot of money in college sports, but should the players get paid?
In case you hadn't heard, the NCAA March Madness tournament is underway again, and with it comes once again a focus on the big money behind college basketball. I mean, the schools get a lot of money and attention, coaches get a lot of money, but players get no payment. Should they? Eric Chemi is with us to talk about this controversial topic that comes up again and again. Is this gaining any traction? How will this work?
It's coming up again and again, but this year in particular because of the FBI investigation into bribery, financial advisors, all kinds of weird things going on with shoe companies to agents. Right. So this year, and rumors are out there, the FBI may drop another bombshell during the tournament or as soon as the tournament ends. So it's getting a lot of steam that maybe the players should get paid to get rid of the black market. That's really what this comes down to.
So that's one of the incentives to go to a school if you're going to be paid, right?
One of the incentives would be to get a direct salary. Other people have ideas that say, don't get paid from the school, but we'll allow you to get endorsement money. That way the schools don't have to pay you anything. But if you're good enough to get an autograph deal or a shoe deal, at least that's some side income for you, but it doesn't cost the school anything. That's another option out there.
Is this a zero-sum game? For winners, there are also losers?
A lot of people will say that there's many winners if you allow this to not be in the black market. Shoe companies would definitely win because instead of having to go through all these secret ways to funnel kids to the schools that they sponsor for their shoe deals, you could just pay those kids directly. It would probably be a loss for the colleges because now you may have to pay students, so that's going to be a big cost to you. Maybe you have to cut other sports that you were subsidizing through these revenues.
So that's one of the side effects, right? I mean, it's not an unlimited pot. It's a big pot, but it's not an unlimited pot, right?
Right. Maybe the coaches' salaries aren't $3 million. Maybe they need to be $1 million because you got to pay the $2 million out to the players. So there's money. It's a limited pie. It has to go somewhere.
But, you know, it might keep kids in college, though.
Right.
They leave after one season because they got dollar signs in their eyes going to the pros.
Or it might be more like baseball, where if you're going to go to the pros, you just go straight to the pros, or you got to stay in college for 3 years. So then you're committed to sticking in college as opposed to leaving after 1 or 2.
All right.
Good to see you, Eric. Thank you. Eric Chemi joining us tonight.
All right, let's take a look before we go at how the market fared on this up and down and kind of sideways day. The Dow Jones Industrial Average advanced 115 points to 24,873. The Nasdaq lost 15. The S&P 500 was down just a little bit over 2 points. And tomorrow is Friday.
Yes, it is.
Yay. All right, that does it for us tonight. I'm Sue Herrera. We'd like to remind you that this is the time of year your public television station seeks your support. Thanks for joining us.
I'm Bill Griffith, and we do thank you for that support. Have a great evening. See you tomorrow.